Hi everyone, my name is Marcy Berger and I'm the Member Services Coordinator at AFSA. Welcome to the Value of Employment and Income Information in Today's Lending Landscape presented by Carly Peroutka. This presentation is a part of AFSA's Business Partner webinar series, which allows industry experts to share timely educational topics directly with AFSA members. For more information about the series or how to become a presenter, feel free to reach out to me following today's webinar. A few housekeeping notes. To ask a question, use the question box on the side of your screen. The slides and recording of today's webinar will be available later today on AFSA's website in the Webinar Resource Center. Finally, you'll receive a survey after the webinar is over. Please take a moment to complete it. Your responses help us fine-tune the program so we can target the issues that are important to you. Our presenter, Carly Peroutka, is a consumer finance sales leader for Equifax Workforce Solutions with more than 15 years of experience of working closely with mortgage, auto, fintech, credit card, and personal loan lenders. She was responsible for leading a national sales team in achieving client goals by developing deep client relationships built on trust, thought partnership, and value creation using unique data, innovative analytics, technology, and industry expertise. Carly received her bachelor's degree in international business from Southern Illinois University, Edwardsville, and an MBA from Maryville University. And now I'll turn it over to you, Carly. Thank you.
Thanks, Marcy. And thanks everyone for joining today and spending a little bit of your Thursday afternoon with me. So as Marcy stated, today I'm going to go over the value of verified employment and income. And the topic is really convergence. So when we think about convergence, we think about several things coming together and moving toward an endpoint. So with that, the first is our lenders. And the goal of our lenders right now is how do they get to a place of growth and really pre-pandemic growth. So when we think about growth right now, it's a little bit different than how we thought about it in the past, in that we're in a different place. So we need to get back to pre-pandemic growth. So our lending community is looking at that. That is really their goal. And at the same time, we have regulatory expectations. So this is from the OCC. We know there are multiple regulators in the industry, but what our regulators are telling us is that they're looking for lenders to focus on financial inclusion and on fair access to services and fair treatment. And then we have the work number. So back to my immediate topic of convergence, these are the three things: lenders' goals, regulatory expectations, and then how does the work number fit in? So on this particular visual, this really gives you a good idea of what changes for an employee once their employer starts contributing data to the work number. So if you look at month 0 and beyond, you can see the change in their probability of securing a loan. And more importantly, on the box to the right, 48% increase in subprime borrowers and 147% increase in deep subprime borrowers. That is what the employers are enabling their employees to do once they start contributing to the work number database. So here it is, convergence of lenders, their goals of growth, regulatory expectations, and the work number. And when that happens, what we have is we have better visibility, expanded data from more than what we've used in the past. So as we're looking at a dynamic lending environment, we have to look at new ways to see our consumers and a frictionless process. This is something that is very important to all consumers. So first, better visibility. 91.5 million consumers in the US have thin and no credit files. That's a lot of consumers, and we are challenged to make sure that we are looking at those consumers in different ways by the regulators. 24.1 million of those consumers have information on the work number database, and 7.2 million of those have active employment and income records on the work number database. And just some more stats, 33% of that thin no file that are on our database are within 18 to 24 years old. 67% of them earn $20,000 to $45,000 annually. So this all ties into the slide I showed previously of what happens when employers start contributing data to the work number. These folks start to be seen. Financial inclusion and fair access to credit starts to happen. And then expanded reach. On this, we are talking really about how do you find those consumers? How do you go and get the ones and look at them and make safe decisions when they are score averse? So they aren't credit active and they really are seeking out lenders who rely on alternative data. And you need to be looking at alternative data in order to find these consumers and be able to approve them. The Work Number fulfilled 223 million requests for verification of income and employment in 2020. And just as a point of comparison, there are 157 million people in the United States that are currently employed. So more verifications than the current employed population. And, you know, of course, folks are obtaining lots of different access to credit, but I think this is an important stat, understanding that we have such a large credit averse community. And then reducing friction. Reducing friction, I think, as a consumer is my focus, as I know lots of folks are. So I want to be able to do things digitally. I want to be able to do things easily. I need an easy button. And when I'm looking for an easy button and I go in and apply for anything, I know that I'm looking for everybody else to do the work for me, right? So if you are a lender and you're manually collecting pay stubs and W-2s, you're unnecessarily adding friction to that credit process. Often consumers are understating and overstating income in an application process. So this is another piece that is so important to make sure that we are, again, making safe financial decisions and risk decisions on consumers as we are driving to both those goals of pre-pandemic growth and also financial inclusion. Applicants are 34% more likely to be funded when lenders use a third-party verification solution. So think about all of the verification or the loans that are out there that can we say yes more often? And how much data do we need to be able to say yes? So on this slide, this is what I call the green means go slide, and it talks really more about that friction process. So at the top, if you'll follow along with me, you know, we've got a process flow that talks lenders through lender requests a document, and the consumer might leave to go get a pay stub. All of these points in gray are points in which we know consumers are potentially not coming back. They're fallout points. And so we've got someone leaving to go get a pay stub, and then they search for their pay stub. And even if that's not physically leaving, even if that's leaving an application to go to another application to obtain it, that's still within the purview of what we're looking at here. So when a consumer is leaving to go get anything, that's what we consider friction. The easy button is at the bottom. So when a lender wants to pull verified employment and income, then they can go to the work number, obtain that information, and the consumer is not bothered for anything. They're not asked for a pay stub. They're not asked for credentials. They're not asked for anything in that application process. So it makes it very easy to use the data, again, to get to that pre-pandemic growth mode and do it in a safe way so that we're giving access to credit to those who deserve it. All right, so accessing the work number. Accessing the work number can happen a lot of different ways. So you can see that we have a web-based application, and on that web-based application, we have folks accessing the work number there, and they do it throughout all different points within the life cycle of a loan. So this happens today with an application. So if you're a lender and you have consumers applying for an auto loan or an unsecured loan, generally, or any type of access to credit. You can pull the work number based on your permissible purpose, and it requires a two-step login, and you have access to it. So that's at the application stage of a loan. We also have lenders and financial institutions who pull the information during account management so they can evaluate risk. They're looking at their files, their portfolios, to understand what they have within that portfolio and how they can create their strategies to manage. The system integration is commonly used by our customers to access the work number. And I think this is important because it changes, we think about integration as an easy way to access data, but I'll take it one step further and say not only should it be integrated, but it should be automated. So automated with your decisioning logic so that you are accessing that additional data. Again, going back to growth, financial inclusion, and this data, all converging. And then the batch process on the right, this really falls into place with the lenders and financial institutions that we work with that are looking at later in that loan life cycle in the account management phase. Here we see a lot of portfolios being reviewed to understand what risk they have and how they can create their strategy based on the data that we're able to provide. So I talked a lot about the work number database, and I think on this slide, you can see where it sits today. So the work number database is a database that has been built over the past 25 years. And I have been, as Marcy stated, I have been here for 15 years. And in my 15 years with the work number, I have seen this database grow from 1,500 employer contributors to now we have access to records from over 1 million employers. That equals out to be about 115 million active income and employment records. And with that database, it goes back to everything we've discussed today. You can make fast, informed decisions by accessing it. It's going to give you employment and income that came directly from the employer. So when you think about that, you think about that compared to applicant stated income. What we know about applicant stated income is that 52% of the time it's misrepresented by 20%. So when I say that, 38% of applicants within that 52 overstate their income and 14% understate their income. That's the importance of this database, because we really need to focus on having the correct data to make our risk decisions. And we all know that when we have misstated and misrepresented income, we have consumers who are more likely to default. So back to the work number database, we've got this 115 million active income and employment records. And what it does at the end of the day is it provides a benefit for the employee so that they're able to get the loan that they are seeking, so they have that access to credit, which helps our financial institutions grow. It answers the regulatory expectations of financial inclusion and fair access to credit. And it all converges within this work number database. So Marcy, that is the end of my presentation. And I think we probably have a few questions.
Yes, thank you, Carly. The first question is, with the growth in the database you've shared, how does that translate into improved hit rates?
Yeah, thank you for that question, Marcy. So the growth in the database is important. It will always translate into improved hit rates. So when we talk about hit rates, I want to make sure that we're communicating that correctly, because what that means is that the consumer that you're asking for information on, we have that information, and so that's a hit. And so the more data that we're able to have on the database, the higher your hit rate will go and the more you will grow. Now, again, I've been here for 15 years, and the number one goal of this organization has always been to grow the Work Number database. And that's always in response to our customers. So our customers have said, we want more answers. We want a higher hit rate. That's our, the number one response we get from clients. And so our number one goal has always been to grow the database because that directly results in more hits for our customers.
Great, thank you, Carly. Another question is, others continue to enter into the business of delivering income and employment information. How is Equifax addressing the expanding competitive landscape?
Yeah, so an excellent question. So I will say that for the whole 25 years that the Work Number has been around, we've always had competitors. I know that there are some more emerging recently, and I think in any industry, competitors help organizations grow. So I think that when we're talking to customers about the importance of verified employment and income, that importance comes from a lot of places, right? So the Work Number just happens to be the database that has been around for 25 years and has 115 million active records. But I do think that the industry is starting to recognize the importance of that data so that, going back to our main topics, we can fuel growth for lenders while answering regulatory expectations.
Great, thank you, Carly. Another question is, COVID emphasized how we are changing the way we buy. Do you anticipate a digital focus will remain as life returns to normal? Will the digital market continue to strengthen?
Yes, I do. So all of the financial institutions that I speak with, that's really where everything's going, right? I think COVID hit the gas pedal on digital lending. I do believe it was around before, and organizations were trying to get an understanding of how they could get an offering safely out into the marketplace, making secure risk decisions in a digital market. But like I said, COVID hit the gas pedal on that. And when that happened, our lending community figured it out fast how to get into that digital market. I don't see that changing. In fact, I see that evolving and growing. So as we move forward from the pandemic, I think that we're going to see more lenders coming up with more ways to make that easy button happen. So consumers expect it, and our lenders are stepping up and saying, all right, we've got to figure out a way to make things easy for consumers, because if we don't, they're going to go to the lender that has that figured out.
Great, thank you, Carly. It looks like we're done with questions. So if you have any concluding statements, Carly, you want to make, feel free.
Yeah, I'll just say thank you for those of you who, again, spent a little bit of your Thursday afternoon with me. And I always put my information up. So if you do have any questions, feel free to contact me directly, and I'm happy to answer them for you. And again, thank you for joining me today.
Great, thank you so much to Carly and Equifax. Just remember, the slides and recording will be available later today on AXA's website in the Webinar Resource Center. Thank you so much. This concludes today's webinar.